Okay. Sir,
Huh.
could you please explain us the difference between NSE and BSE, how it works?
It is like a difference between two shops. It's
Mm,
like what is the difference between a D-Mart and another shop? It's like that. Both the places you can buy and sell shares.
mm,
Uh, it also you can buy it in NSE and sell it in BSE and buy it in BSE, sell it in NSE. All that is possible. Only thing is it should have been listed in that exchange. For example, when I have a company, I want to come up with an IPO, initial public offering. Then in that, I can say that my stocks will be listed in BSE or my stocks will be listed in NSE or my stocks will be listed in BSE as well as NSE. Like that, I can decide. So if it is listed in both the exchanges, that means, yeah, it can be bought and sold. Because see, listing is means what? For example, let us say Reliance. Reliance will have a code, RIL or something, so that that exchange will process that code and things like that. If it is not listed, then that code will not be available for that exchange. Just to I am oversimplifying it, but yeah. So you need to go and list your company in that particular exchange so that we can buy and sell. So practically there are no this thing. Then in the derivative side there could be different products. For example, NSE gives NSE's index is Nifty, BSE's index is BSE 100 or Sensex. So these are all the small differences.
okay.
Yeah.
So as a layman, if we go for any of these things, it is the same. Only
Yes.
thing is we should get that company in the list.
Yes. See, for example, you want to buy 100 IDFC First Bank. It's like you want to buy sugar, you can go and buy from any store. Like that, you want to buy 100 IDFC, you can go and buy from BSE or NSE. The shares will come and sit in your demat, irrespective of where you purchased it. And like you buy a sugar, it will come and sit in your kitchen. Like that, it will come and sit under your custody in your demat account. And once you have purchased, the transaction is over. Then it doesn't matter where you purchased. What it matters is IDFC First Bank is with you. Then it is a matter of that share and the particular location where it is kept, which is a demat. In a electronic form. That share is kept in your account number in an electronic form. Afterwards, there is nothing. Exchange is nothing to do. Exchange's job is take the share from the buyer and give it to the seller, collect the money from the seller, give it to the buyer. That's all is the exchange. It exchanges the shares. Then it's its job done. Then afterwards, you want to sell. Okay, you bought it from BSE. Now, can you sell it in NSE? Of course, you can sell.
Okay.
Got it, no? What else?
So tell us about the stock broker, sir.
Yeah.
How this brokering is happening, how it works.
Yeah. See, exchanges, it's like, you are purchasing an iPhone. You are not buying from Apple. You are buying from a local store. No, there is a
Mm,
wholesaler
mm,
retailer concept. No.
mm.
For every product, there is a wholesaler and a retailer.
Okay.
It's like, for example, let us say you are producing something. Let us say you are manufacturing some furniture. Okay, but you
Mm,
don't have a showroom, furniture showroom. So what you do is you will sell that furniture to a particular company who has furniture showroom. So a
okay.
furniture showroom company may not manufacture furniture. They may buy and sell also. So always there is a wholesaler retailer concept, right?
Mm,
Like that, in an exchange also, they have this thing called a wholesaler retailer concept. Retailer means all these people like us. Wholesaler is like the broker, one guy who collects the order and gives it to the exchange. So
Okay.
that is required because otherwise, like for example, let us say there are 100 brokers. Once the day is over, then okay, this broker has purchased this many shares. So this has to be accounted into this broker's listing. All the settlement happens, no? So think about it. The 100 brokers will have their respective clients and their demat accounts and their bank accounts and all that they will oversee. Okay, this is happening. So exchanges will deal with our clearing agents or clearing houses like CDSL and all these clearing houses, no? They will deal with these brokers. And it is practically impossible to deal with lakhs and lakhs of people on a daily basis, no? So they deal it with the brokers, hundreds of brokers.
Okay.
Yeah. That is the idea of the broker, and they charge a small fee for that. And
Okay.
earlier it used to be normal people. Nowadays it is like Siroda and Motilal Oswal and ICC Direct. There are hundreds of them.
Okay.
100 of them. Broking.
Hmm.
In my early days in Bombay, this broker word in our native place and all used to be a very kind of, not a very, he's a broker. It's like marriage broker and stuff like that. No? It used to be a kind of derogative term. Or, it's not something which you will be proud of. Went to Bombay, they say he's a broker. No? Like a broker means it's like
Okay.
they are big. And today, if you see Siroda, Siroda is a broker, right? There's some 11,000 crores or 15,000 crores. That is how that big they are. Yeah. So when you are coming into the market, you need to buy and sell shares. So you need a broker, right? And your money has to go to the broker's account, and from there, it will go to the buyer's account and things like that. So you need a bank account. So you need a bank
Okay.
account and you need a broker. Then you need a demat account, because like how your money is kept in the bank, your shares are kept in your demat account, right? Demat
Okay.
place where electronically shares are kept. So you need to open a demat account. Then to make all this transaction happen, you need an online trading account. It's a terminal, right? Like Siroda or ICC Direct, whereby you input the data of the share and how many shares you want and all that, it's like a transaction fascia, so to say, no? So these are all the things you need to start buying and selling shares in the stock market. And these are important. Why? Because some people may not sell their shares for 20 years. Right. So 20 years, that particular thing has to be there. After 20 years, you decide to sell, it has to go seamlessly. It cannot say, no, when did you buy and stuff like that. No? So everything is interlinked and electronically. It's a massive network. It's amazing actually how these things are.
So how does Sensex come into the place, or what is its role?
No, Sensex is basically an index. What does the
Okay.
index do? It is like let's say you are in a city of Mumbai and you want to know what is the temperature of Mumbai. So what do? You pick some places, okay? You Kolhapur, vary, few places you pick up what is the temperature and possibly you will come at an average.
Okay.
Like that, every day, different shares are being bought and sold.
Mm.
And when you buy a share, you may be buying it at higher price than yesterday or lower price than yesterday. So there is
Okay.
always a change. This change need to be known. Is it getting changed positively or it is getting changed negatively?
Mm.
So we need some indicator to tell, yeah, what is the trend? Is it going up or it is coming down? So what
Mm.
they do is they bring in 30 shares and get a weighted average and
Mm.
they see the difference. Depend upon this 30 shares, whether it is going up or down and how much it is going up, how much it is going down. This
Mm.
whole thing of an index also goes up or down. So it gives you a little bit of an indication, yeah, things are improving or things are not improving and things like that. It is just an indicator.
Mm. Mm.
That's all. It's like,
Okay.
in 1981, Sensex was at 100. Today it is at 70.
Mm.
You understand, yeah, it has gone up. It has gone
Okay.
up times in last 30, 40 years.
Mm. Okay. Okay.
Hmm. Good conversation, no?
Yes, yes, sir.
Casually, when we
Uh,
talk like this, slowly and
mm.
slowly, we can cover all the topics. And
Yes, yes, sir. So, what are the factors that will determine the price of the stock, sir?
like anything else in life, it is all supply demand.
Mm.
Everything, um, price discovery is always about supply and demand, right? Supply and demand is what, how many people are willing to buy. See, for example, let us say I have money
Mm.
and I want to buy a phone and I go to
Okay.
the shop, they say it is 1 lakh rupee. I say,
Mm.
no, 1 lakh rupee is too much, I will not buy.
Mm.
Or I can say that no, 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 at any cost I want to buy. So even if it is 1
Mm.
lakh 1,000, 1 lakh 5,000, I want to buy. That means what?
Mm.
The demand is going up, so the price will go up. In the first
Mm.
scenario, I said that no, I don't want to buy this. So, no, it's a less demand, so the price will not go up. So it is always that equilibrium between the supply and the demand. So like that also,
Okay.
yes, like for example, there is Swiggy or Zomato.
Mm.
Uh,
Mm.
now I feel that yeah, Swiggy shares will go up, so I tend to buy it. Then they say yeah, it is 590 rupees. I say that okay, even if
Mm.
it is 600 rupees, I want to buy. Then I put an order that no market order. Market order means
Mm.
what? I want 500 shares. Whatever may be the price, go and buy.
Mm. Mm.
Then the price will go up. You know.
Mm.
So, so if there are nobody, people feel that no, the stock will not go up, then the seller will put an order. Whatever may be the price, you sell. Then the price will
Mm.
come.
Mm.
So basically it is about supply and demand. Now when the demand will go up, when lots of people are feeling that this stock is good stock and it will go up, so everybody wants to buy, means cumulatively there is a demand for that stock, then it will go up. Everybody is expecting
Mm.
it to go up, that is why it will go up. So it's a purely a form of supply and demand. But supply and demand, behind supply and demand, there is fundamentals like the stock is a good stock, it is in a good sector, and it is a growing industry, or there is demand for their product. And for example, food delivery. They
Mm.
say that we all are using food delivery, so we know that it is a good industry, right?
Mm.
And we also know that more and more restaurants are coming,
Mm.
and more people are having more money, more and more
Mm.
people are having a behavioral change of eating outside, and now people have night duty, and now husband and wives are working, so more and more people consume food from outside. So more and more this trend will increase, isn't it?
Mm.
So people go and buy these shares. that actually this industry can go on for a long time. So things like that. So that is the fundamental goodness of that business or that industry, which creates more demand. So it is like indirectly a company's performance is the reason for the stock to go up, but direct answer to that is supply and demand is high. That is why the stock goes up. I hope.
Okay. Yes, sir. Thank you. Priyaji, you have anything?
Can you tell about mutual funds? So, should we go for mutual funds or we should go for direct?
Yeah. See, it is like if you have a car, would you like to drive yourself or would you like to appoint a driver? That is the difference. Now, if you know driving, then you have the freedom to drive wherever you want to drive. Then you may like to drive yourself. Now, if you don't know the driving, but you have the car, then it is better to appoint a driver and make him drive for you. So it is like that. Now, if you understand stock markets, which stock to buy and sell when, then you don't need a mutual fund owner or mutual fund to handle your money. You yourself can buy and sell. And I prefer to buy my own stocks because mutual fund, first of all, you need to pay some money to them to manage the fund. Not only that, it is also highly regulated. They cannot invest in few stocks. They cannot have a concentrated portfolio. They should have minimum 30 stocks, 40 stocks, like that. Because that industry handles large amount of money. It is very highly regulated, and there are rules and regulations which they should follow. In one way, it is good because it is mitigating a lot of risks. But if you see in another way, in a highly concentrated portfolios, your returns are also high. As much as risk is high, your return is also high. So for example, I would like to go for little higher risk, calculated risk, and I would like to venture for little higher returns, right? But these things, mutual fund cannot do much because it is highly regulated. So I would like to do it myself. But if you don't know stock markets, you don't know how to analyze a stock, you don't know which stock is good or bad or anything, then you should go for a mutual fund. But I would say the one thing what all of us should do is to develop little bit of knowledge. Even if you go to mutual fund, there are several mutual funds. Which mutual fund you will choose, right? If you don't know anything about finance, we will eyes closed choose. Yeah, ICC is good, HDFC is good. Okay, I will go for it. Okay, they are good, but in which shares they are investing? Who is the fund manager? What is his track record? Which industry he is betting on? Is that industry good, bad? Your judgments can also come into play if you know finance. So even if you want to invest in mutual fund, it's okay as long as you have financial knowledge. So that is why it is extremely important that we develop finance knowledge somehow. And today through YouTube and so many resources are available, so we can easily develop the knowledge, and that can help. Make sense?
Yes. Yeah. And for a person who does not know anything about like any financial knowledge, how should the start? Like, how should be the starting? Like, from where to start? How to start? what, like, is there any magazines, or what should we do to get updated or to get that knowledge?
Yeah, see, if you do not know anything, it is very easy and very advantageous because anything and everything you can learn, right? If you know so many things and you know how to get better is where you need more specific resources. If you don't know anything, you go to Money Control or you go to some of the broker site, or you know there are a lot of YouTube videos whereby you can learn the basics. What is P ratio? What is EPS ratio? You know, what is the balance sheet of a company? What is this thing? You know, fundamentals. Understanding stock market or understanding a stock is like understanding a business. So what the knowledge required is what is a business? How does a business functions? And what is a efficient business? You know, how the business is being run. Is it business is well run or it is not well run? These things you can learn from these sites. Also, sometimes it will be very difficult to learn because which one to learn first, which one to learn second, you know, how do we get all the knowledge in a structured way? That is where some of the stock market courses come into play. You know, if you join some, see, the funny thing is that all over the world, there are no courses for stock markets. It is such a big thing, but it is unfortunate there are no courses for stock markets. Okay, there are few certified courses in NSE and all, but because this is like hands-on, right? And it is daily, it is changing. New companies are coming, new regulations are coming, new businesses are getting developed. You know, there was nothing called Zomato or food delivery 10 years back. Today it is a very big industry. So like that, new industries are coming. You know, it's like online tuition is a big industry today, which was not the case 10 years back. Even though there was an industry, it was not online, it was always offline. So like that, how do we analyze these businesses and you know things like that. So so where I was actually, what I was explaining.
For new
So
people,
the
sir.
education is very vast.
Yeah. So you can keep on learning about these things. So these structured courses, there are some structured courses. We are also thinking of launching some course in the future when the time comes, whereby we can learn from the basics, like how from first standard to second standard to third standard a child is taken. Like that, if we can create a structured course, there are some courses here and there I have seen they whereby you can start from the basics of finance to how to analyze a stock and how to manage a portfolio and things like that. So right now it is little kind of, if you want to learn methodically, you have to go for some courses. May not be one course, you have to go for several courses. And I used to read books and develop the knowledge. And I also listen to podcast and listen to big investors like Ramdev ji or you know Mr. Warren Buffett and things like that. What they say, how do they talk, how do they think, you know, slowly. And the the thing is that it is long term. Investment is a long term business. Finance knowledge development is also a long term business because we keep learning, we keep learning, we keep learning. It never comes to an end, you know. So, so one should have passion towards this. One should have willingness to learn this. Then it will work. Not a big deal. Yeah,
Passion and patience, no, sir.
passion and patience. Yeah. Yes, in learning also, in making money also. Like for example, I was telling to Kavita the other day, I have invested in IDFC First Bank in 2018. That time it was 43 rupees. Today it is 65 rupees. You know, some of the companies in this time has gone up 20 times, 25 times, 30 times. Whereas this stock has not moved at all. It is 1.5 times in 5, 6 years. It is frustrating. You know, if you see the company is performing well. Earlier, they used to, in 2018, when I was buying the stock, it used to have 200 branches. Today, they have almost 1,000 branches. And number of employees, it was 7,000. Today, it is some 30,000, 40,000, something like that. So, in every parameter, the company has performed well. Only the stock has not performed well. So, I'm waiting. A day will come, the stock also will perform. But it is really, sometimes it is really frustrating to be patient, to see everything is performing, only your stock is not performing. And that is how it works. That is why everybody does not become rich in stock markets, you know. So it is patience and passion. Yeah. What else? I think Chandana is also in the call, no?
Oh, yeah.
Yes, sir. Yes, sir. Yes, sir. Good morning, sir.
Any more questions?
No, sir.
Okay. So you can think of several questions in your investment journey and
Mm,
can discuss it.
sure, sir.
Good. So you people are investing regularly in the markets?
Not on a very regular basis, sir, but on and off, yes.
Yeah. See, we can little bit talk about inflation. Now, inflation, like for example, let us say you have 1,000 rupees today. The 1,000 rupees can buy, assume that one pant and a belt today. Or assume that you have 10,000 rupees and you can buy one shirt, one pant, one belt, and one shoes. Okay. Now, after 2 or 3 years, due to inflation, if you have the same money of 10,000 rupees, you cannot buy all these four things. You will be able to only buy three things because everything's price is going up. When the price is going up, what it is doing is your purchasing power is coming down. Okay. Because 10,000 rupees can buy, let us say, four things, and the things prices are going up. So its ability to buy comes down. This is inflation, right? Okay, inflation, there can be 100 ways we can define inflation. Possibly next week we can talk about inflation. We can come up with questions on inflation, things like that. So inflation is constantly pulling your purchasing power down. In the economy, any product's price goes up means your money's value has come down or your purchasing power is coming down. That is what it means. So you hard-earned money is coming and sitting in your bureau or your bank account, and its value is coming down, its purchasing power is coming down. So even if you have 100 crore rupees, if you don't do anything about that money in 30 years or something, it will be worth like 1 crore. No? So it is very essential. It is like how exercise is essential to maintain your body. Some investment is required to preserve the purchasing power of your money. If you don't do that, your purchasing power or your money power is going down every day. that is where investment comes. No? At least in gold or at least in some assets, you have to invest. And this cannot be like when I have money, I'll invest. You have to invest first. Warren Buffett says, no, your first expenses has to be your savings. And savings in our olden age, our parents used to say that save the money, maybe keep it in the bank or something. Now I would say that our first expense has to be investing. And it is a golden opportunity for India or Indians, because today our economy is at 3.7 trillion, 4 trillions, and it is expected to go to around 40 trillion in about next 30 years. So assume that it is going to 30 trillions. After that, will it go to 300 trillions in or 90 trillion in next 30 years? No, it won't. So it is a golden era because of the demography. Like India has an advantage of young population. Indians are young, so they are coming up, and Indians have big dreams and goals, and a lot of new entrepreneurs are coming up, and digitally India is growing, and so many opportunities. So this is an one-time kind of an opportunity for all of us currently living in India to create wealth. See, countries like Japan, okay, it's a developed economy. Last 20-25 years, their stock markets have not performed at all. It did not go up at all. It's kind of stagnated. Likewise, China. If you see last 12-13 years, Chinese stock market did not go up at all. It is at the same level as that of it as it was some 15 years back. This is what will happen after 30 years. So till 30 years, India's economy is expected to go up, meaning in India, lots of companies are expected to perform better. Their profits are expected to grow higher. So when that happens, if you are an investor in that company, your money also will grow. It is an opportunity. Once the stock market stagnates or gets stagnated or things like that, then you will not have this advantage. Then what will happen? You need to work hard and make money, and that's it. Whereas this is like an opportunity. So don't miss this opportunity. Take advantage of the stock markets, learn little bit of finance, invest in right company, and have passion and patience. You can make tons of money, big money. See, like earlier, if you want to create a company, it will take 30-40 years, right? Now there's a company called Zepto. No, it is not yet listed, but they are likely to come up with an IPO in about next 1 or 2 years. Zepto was conceptualized in 2020. Okay. And 2021 is where they kind of started really and stuff like that. In 3 years' time, that company's valuation today is $5 billion, meaning around 45,000 crores. So think about it. They have created this value, this wealth of 45,000 crores in 3 years. At the age of 18, they started this company. They are now 22 years old. 22 years old. So, I mean, if you had invested this money in Zepto, this money would have gone up, what, let us say 1 crore rupees you have invested in Zepto in 2020. That money would be, it's like maybe 100 crores or maybe 1,000 crores today. So that is an opportunity, right? So the similar opportunity is what stock markets offers you. It may not offer you that much rapidity in growth, but at least if your money can grow at the rate of 20-25% year after year also, you can amass quite a lot of wealth. All of us should do that. Otherwise, we'll be a prey to inflation. All our wealth, whatever we have, worked hard and made money, inflation will take that money away. Okay, nice. We'll meet next week.